Hi, it's David here with Futures Trading. I want to make sure that we can look at our daily NQ so you can kind of get an idea of what we're doing. And I want to thank you guys for, of course, practicing the professional etiquette there. I know you guys had definitely hit the like button and left some comments. So thank you so much for being professional. I celebrate other professionals. Thank you so much. It's important that we do practice the right etiquette because there are so many other fields that celebrate one another and they, of course, support one another. So that's good. And I'm glad that you guys took the time to do that. Let's look at that daily. Let's look at that daily, and we're going to kind of discuss some of this information here. I have put this zone here because, again, I've been doing some training this morning. So, put this zone here, and I want to give you guys some information so you can go ahead and see it. The turn of the market off this mid, they are kind of stalling at it, but they should continue up to that trend distance. Now, the price pattern, it started from down here. Okay, so the low of this bar is 303. This bar right here, this little teeny guy right here. Low L, that's the L 303. Then they came back, got that mid. It's all about that mid being above the high of this bar. So let me get this here because the crosshair is in the way. So this bar right here, that mid was above the bar high. This one right here was above the bar's high. The prior bar's high, that gives you the level. The NC come under that bar. Now, the low of this bar will go 303, and the low of this bar here is 311. So they came really close and then they took off. All right. Now, with the price pattern, you want it to show up soon. The sooner it show up, the much more likely it'll go. So, like here, it didn't show up right away, so that that up had failed. The sooner it show up, it can go, and we're going to talk about that because this video is all about two bars. So we're going to really, really drive that point home. It's all about function. Now, keep in mind, whenever you cut on a light, and I want to say this, it's all about function. You cut on a light, you get the light. You cut the light off, the light is no longer there. It's the absence of what was there. That's all. And so when you're trading, you need to be able to take a look at a chart and apply something that's universal. So when the absence of it not being there, you get the opposite effect. I want you to get the gravity of that. Really understand that. I want to make sure that you see the chart from a very contextual, functioning, simple disposition. I don't want you to be confused about what's happening. It's very simple. You shouldn't pull up a chart and be lost. I don't want you to be lost when you look at it. Okay. I want you to pull up the chart and say, hey, it's really simple because the chart is trying to intimidate you. And I won't sensationalize trading. It's two different functions going on there. And whatever you learn here, I want you to go to the chart and say, hey, I'm confident based on what he's told me. And I see that it keeps happening. And so if I, try to sensationalize it, it's going to take away from what's there. And I don't want to do that. So other YouTube personalities, they'll do that. I'm not that. So we want to take this two bar. This video is all about two bars. If the mid of this bar is above this bar's high, it can go up. If the mid of this bar is below this bar's low, it can go down. It should offer you more movement in this direction. It should offer you more movement in that direction. How much more movement will all depend on a couple different things. So really important stuff. But if that mid is inside of this bar, it can offer you the opposite. All right. Now, with this high, this red bar mid did not get above this bar's high. And of course, this green bar's mid did not get above this bar high, even though we went above the high of both. This bar's mid did not get above this bar's high, and we've been kind of at it. Now, this morning, you can see that this black floater, if you will, not the price line that's up here, the black floater is the mid of this bar. It's not above this prior bar's high, at least not yet. And so this morning kind of got, the valiant back and forth, right? Kind of got that valiant back and forth, but they ran above the bar and then came back off of it. You just want to make sure that this mid get above that bar's high. And then by the time I upload this video and you see it, if this bar's mid is clearing this bar's high, the red bar becomes the hard stop in this case, and it should go ahead and continue on. There's the trend distance. We actually projected the trend distance from here, the seventh bar from the trend off the bottom. All right. So we're going to go over trend as well. But when we made the trend, we projected that it should go this far, and they're not there yet, but they're responding to the mid of this reversal. And of course, there's that static, and we'll touch on all of that information as well. All right. So we've been covering this ever since they was up here, but from this bottom, we actually covered this in the video back on the 26th, and I've been giving you upside targets, and they've been hitting them. All right. So now let's take a look at some of this information. Again, I've been doing a little training this morning, but let's dive into some of this content. We had the 7 bars. All right. So we had the 7 bars here, and it's all about the closes. All about the closes. Close, close. I'm sorry, close here is higher than this one. They have to be higher. Close higher than the prior, 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 close higher than the prior. Closes are important. All right. It's not just the wicks. We got to get the closes involved. All right. So now we have that distance, but before 9:30, they pulled back. All right. And then 9:30 showed up here and then ran. All right. So now you're looking at this distance here with volatility. All right. So now the distance is changing just a bit because it's becoming a bit more volatile. You're you're to expect this moving forward. All right. Now, when they turn back down, there's not 7 in this. It's not. And so that distance should show right back up. All right. And it actually went a little bit more. Now, I did take the liberty of just doing, of course, the count back up, just counting it back up. So there was 6 here. Here's the center, the COT of that up. All right, so here's the COT of them trying to get back up. There's the 7th bar here. You ignore everything in between. All right, so this is not 7 here. Clearly, you can see that, and so they made that. And so here's the center of the trend. They came down here, there's 7 here. However, they ran into the center of the trend, started to turn back around, and here's the center of the trend here. They didn't want to slow down. Now, the sooner, all right, now that's something that I was talking about here. The sooner that this price pattern can show up, it will go. The sooner it show up, it can go. So just want you to know that you really want to take this right here. This is the participation. All right. So if the mid is above that high, or if this mid is below that low, that's the go. That's the go. Let's get it to go. If that's not there, you're going to get the false breakout scenario. All right. So people want to know, well, how do I know false breakouts and stuff? Remember, it's like the light. You cut the light on, you have light. You cut it off, you're not gonna have no light. So if this the go, well, the absence of this is the no go. So we're just not gonna go yet. And so you'll end up with this. It's really simple. Want to make sure that whenever you go to trade, that you're able to get this information understood very quickly and understand what's happening. So we're trying to get consecutive closes above highs too. That's important. Want to see if we can get consecutive closes. If you can get that to show up, see, we had a high here. They did 2 closes above it. They leaned back and then they went a little bit higher, got up to this high here, didn't give the consecutive closes. They're turning around and coming back. All right. So really simple stuff. If you want the chart scale, all right, it's for free. You can absolutely have it. So this green line, black line, and red line provided to you absolutely at no cost. So you can absolutely have it. These are participation bars, the green, the red ones with the levels and the no close. That's actually an indicator that I coded. So if you do want to acquire that information, because that's all it is information. It does come with a cost. It does, but you have to email me and let me know you're interested, and we can discuss that. But if not, you can definitely pick up again because I'm not here for that. But you can definitely get this free stuff that I'm willing to give you for free. This chart scale, you can get that green line, red line, and then of course that black line, and you can put that on your platform. So I'll give you the template for it, but you also get the other things too. So let's we're going to look at that 2 bar scenario, but let's dive into these other charts. All right. So we have the ranges. Matter of fact, let's start over here first. This is popular right now. Boxes, gaps, if you will. That's popular. I want you to know. Let me blow this chart up real quick. Before the box, there's a green bar. All right. There's a green bar before the box. And in some cases, you'll just see my green bar, no box. So let me stay in draw mode here. Before the box, there's a red bar. No light, bad light on the fellow that's teaching this information. If it's profitable for you, again, go ahead and go with it. Win all that you can. I'm all for that. I just want to let you know that you can get in it sooner. That's all. Just want to put that in front of you so you'll know how you could know that the box will even show up. I've been trading this long before there was ever an ICT. I'm just that old. And so it's really important that you understand that this price pattern is going to show up before the box. Okay. And you can go back and pause the video. But if the box come in, so be it. But definitely the price pattern should be right there with it. Now, oftentimes you will get the red bar before the box. Or the green bar for that matter, red bar before the box, green bar, no box. Okay. It's really, really important. Red bar, no box. Let's scroll back here so you can find you a few more. Red bar, no box. Green bar right here, no box. And red bar, no box. Well, red bar, then the box. Let's see, green bar, then the box. So it's going to come in oftentimes red bar before the box. So you're going to kind of get the price pattern. Okay, green bar before the box. You'll get the price pattern before the box. Sorry, it's all about mitigating risk. I'm not trying to up my risk, and I don't want to counter the market. Okay, so I know that's something that I've heard people reference when it comes to trading the boxes. When it gets to the box, go the other way. Don't want to do that. You want to make sure that you're applying what the market actually does. I'm not naming candles after myself. I'm not saying hey, I'm behind the movement of the market. I'm not doing any of that stuff. It's not necessary. Okay. It's really simple. It's up and down, and that's all the market is doing. It's fluid and it's always happening. So simple stuff there. Now, here's the ranges, and then we're going to go into that two-bar pattern because I want you to know that that's important. So this morning's Valent up and down. Remember, on the daily, that mid needs to be above that bar's high. If not, you're going to get that back and forth. They ran into this range over here. The mid of these ranges is important. So they ran into that range there, and then they fell back down. Now they're trying to use this means here to get back up. This is the overnight one. And I'll just scroll through it. And again, you can have these ranges as well. I would give you the ranges too. So I'll just scroll through it. And again, you want to use the means, the mid of the range. You want to use the mid of the range to see can you get that activity. Of course, the high of the range, bottom of the range, you can use that too. But the mid of the range, that's important. Use the mid of the range. I'm gonna just show you a few days of this. Again, just the mid of the range. Try to use that. It's really, really important to do so. All right. Now let's go. I'm just scroll just a bit more for you so you can kind of see how all of this stuff works. Mid of the range, mid of the range, mid of the range. And of course they run away from these ranges. All right, now that's enough of that. All right, so now the mid of the range, you can have that for free as well. You can even get these statics for free. I figured out a way to get them on the chart where I don't have to draw the boxes, and I will absolutely provide you this template. All you would have to do is change just a couple digits, like right here from 59, you would go, take out the 59 and, put whatever number. It's the first two digits here primarily for the intraday levels 60, 61, the 95 to 85, 25, 15, 55 will always be there. Just change the other two numbers, but I put enough of them in there. So should you, get the template, you're more than welcome to it. I'll scroll through it and let you see it. But these turning points, you don't need no daily bias. You don't need a higher time frame alignment and all this other stuff. You need to make sense of one time frame, and I want to help you do that. So if you just looking for some quick trades or a place where it could turn, the target is 55 all the time. They're always trying to get to it. I want to help you find where that's at and just give it to you for absolutely no cost for free. And you can just go ahead and, begin to get your trading to work. So if you're having a little bit of a hard time, this should help you out tremendously. So you can get this template for free as well. All right. So I'm just scroll through it, just a couple. Yeah, and they just ran through a lot of them there, but you get it. All right. So you can have that for free as well. So the ranges, the statics, and then of course that chart scale. Now let's dive into that two bar. The trend. I want to make you aware of some procedural information. So if you're new to the channel or you've been following me for some time, still hit the like button, support the information. We want to make sure that other people are able to find something that's useful, that's simple, and that they can apply it straight away. All right. So procedural knowledge want you to have an official way of doing something. It's like knowing the function of something. You want to make sure that you understand the function so that way it repeats itself and you can just keep implementing it. You can keep doing it over and over and over again. Now, on this chart, we have a couple of other indicators that come with the training. Again, very simple stuff. And I'm going to tell you what it is. Yeah, you'll see the H and you'll see the L. Now, for the H, you're just looking for this. You're just looking for a bar, and it's really all about the highs, but I gotta give you a green bar because if it was going up, that's what you got. All right. But it's really this. This is all you're looking for. Just all three of those highs being lower. That's it. It should go that way. All right. It should. Now, when it comes to the up, this is what you're looking for in order for that L to show up. You just want all three of these lows to be this way. That's it. All right. Now, The C's, you're going to see these little C's pop up. And we're going to watch this for a bit. You're going to see that. And this is what you're looking for with this. All right. So we're trying to go up. So we're trying to go up. You just want to see this, the bar is high. You just want to see if you can get two closes. I don't care what color they are. Just get two closes above that bar's high. They don't have to have any kind of gap. You don't need that. That's not necessary. Making it too complicated. Don't want to do that. You get a down bar. You just want to get two bars that's willing to close beneath that bar's low. That's it. So this is the up. Okay. This is the down. Okay. Really, really simple stuff. If you're new to trading, this is what you want. Now, the bar pattern, let me put that on this chart because that's what we get ready to do. It's all about two bars. Two bars. That's it. I want you to pay attention to two bars. And once you're done with two bars, then go ahead and grab some of that three bar stuff. All right. So, really simple stuff. All right. Simple stuff. There's ways to look at these bars that will absolutely shock you. I'm giving you the free stuff. I mean, absolutely. Getting this right here can get you profitable if you retain the information. I promise you that. You just want this. Let me turn this around. You just want this. You just want this mid. Let me move this above that bar's high to go up. And you want that mid beneath that bar's low to go down. If that's not there, you're going to run into this. That's all it is. It's really just that simple. You're going to run into that. And so if you don't want that to show up, please make sure that this is there. Now let's start to take a look at some of that. All right, so now we got the mid, which is that black line. It's inside of the prior bar. It's inside of the prior bar. So what are you getting? You're getting this. That's all. You're getting this. Now, eventually, it will come away from this. It will, but that's what you're getting. You're not getting any C's. Okay, that's that C. You're not getting any C's above these bars. You know why? Because they're not willing to close two candles beneath this bar's low. This bar right here. They won't close two candles beneath that bar's low. They're not doing it. It's just that simple. So the C is not going to show up. And if you want to take it a step further, if you want to take it a step further, these highs, okay, you only had, two like that, and then you ended up getting one like this, with this bar, this bar, this bar. Okay, now from the bottom, you see the L just popped up. Okay, it's not to say it'll go up and stay up, but it's doing that. Okay, it may offer you some more to the upside. How much more? We'll see. We'll see. That C is up here though, because remember from up here, you're getting this. It can't be both. It can't be both. All right. So that mid is still inside this bar's the body of this bar. Well, inside this bar, period. It's still inside that bar. So you may end up with some more of this. You may, and they may change it and then start doing this again to bring it back down. It may. Now, it's all about the two bars. You shouldn't be trading for any amount of time and not willing to understand that two bars, there's only two types really. It's trending and non-trending. That's all you have on the chart. Trending, non-trending bars. That's all you got. Trending, non-trending. Now, I tell you that the market is always trending. You just may have to change your time frame. All right. So if you want to go up, and the time frame you're looking at is going down. Don't be on that time frame. Go to something different. All right. So it's always trending because it's fluid. So and if you don't believe it, go grab a tick chart. You'll see it's always a trend on that too. It's always moving. It's not going to stop. So it's fluid. All right. So now can we get these highs to begin to do this? Can we get it to begin to do that? Now, clearly this mid is below that bar's low. So this should turn red. This will become the no close and the level should pop up here. Okay. Really simple stuff. All right. This bar right here has the C and they close, two bars beneath it. So now let's see if we can get that to happen. I see they trying to come up. Let's see, can we get this next bar to come back down and give us that scenario? Now this is the no close level. That's the hard stop. There's occasions where they'll hit the stop and still close back beneath that no close level. So just keep an eye out for that too. So we're not getting this yet. We're not getting this yet. We're not. they're still doing this right now, trying to offer it to the upside. They're trying to do that from down here. So they ran down here right into that, and now they're trying to push up. However, this is a no close level. All right, so that's a no close level. Let me remove that because they didn't give it to us. This is a no close level, so they may kick the stop, but not close above this level. They may not. Now, here's the bar timer down here. We got like 18, 17 seconds left on the clock. All right, so let's see if they can close above this level and see if they'll keep offering to the upside. Let's see. Really simple stuff. Now I know you saw here you had the H, but then they, went outside that high. Remember, you want to see if they can give you two closes. All right. So you want to see if they only did, they kicked your stop. Now you know all of these mids, because that's what these little black lines are, is inside of the prior bar. So you're still dealing with this. You're still dealing with that. All right. So not a surprise there that they did that false break and then came back in there. That's what I'm trying to tell you about. I'm trying to make you aware of this stuff so you can just take right off and know, hey, if this happens, I'm okay. If this happens, yeah, it may be changing on me. May still be okay. It's just the timing may be different. That's all. It may just take another candle, maybe two, before it should get back on its way. So it's all about two bars. Can you keep the focus. Now let's do what's happening off the top here. So we had one, two, three, four, five, six, and there's seven. All right. So now this is a trend. It's absolutely a trend. Can they do the distance of the trend? Let's see if they can do that, or will they turn it back around and go back up there? All right. Now that's the thing about trends, and it's right there, and we're going to talk about that. They're irreversible. All right, they're irreversible. Now, until the participation change, I'll say that. Until the participation change, they're irreversible. Now, you can wipe a trend out. It's just going to, in doing so, the participation going to change, and then they're going to create another trend, and guess what? That trend won't be reversed. So we have to make sure that we're keeping in mind that's the center of the trend, what I just drew, and we're going to see if they're going to go off of, let's just drop this right here on the bottom of that trend bar. We're going to see if they're willing to give us that information. And again, it's all about the two bars. All right, it's all about the two bars. So we're going to be taking a look at these two bars. Now, is they going to give us that distance from the trend bar, or will they give it from up here? Let's get that too. Let's get that too in case they decide to turn back around. All right. But you're always wanting to find a trend. So, well, they kind of lift it up here and turn. Let's see if, no, I'll just do it like this. We'll do it like this. See if they'll hold that and then go back down. We'll see. So you only got two places where this can actually take place: off the trend bar, or off the center of the trend, the COT. That's all. You kind of want to see if that's going to happen. Now, I tell you, of course, that the mid of the reversal is important. So here's the mid of this bar. You see this mid, drag it forward. All right. So they may be reversing, trying to get back up. Let's make this black because that's the mid of that bar. Let's make that black. All right. So this the mid of the bar. All right. And it started with this. Okay, it started with this. Now you had your L back here, but we're talking about what it started doing when we came over here and started taking a look. All right, now there's the C because you had two closes above this bar's high. Okay, so you had two closes above this bar's high. Okay, this is the no close. This is the hard stop. Now let's see if it'll run up here. Clearly, they get ready to trigger this stop right here. So they're getting ready to go through this information. Now, this is something I will tell you. The sooner that this price pattern show up, the better it is that it could definitely go that way. Let's see if they hit. No, they didn't hit the stop on this right here. They came to the no close level. This is a no close level. They hit that. They didn't close beneath it. Remember, this the no close bar. They hit it, but they didn't close beneath it, and they're turning back around. All right, so now if they're going to go back up, let's get our trend distance because this is how far they're going to go. All right, so it's all about how far they're willing to go. All right, so we'll go with the trend. Trend bar was right about there. Okay, remember, we're going to go with the trend distance. So if they're turning back around, that'll put them right back through that high. All right, Really simple stuff. I want you to know that. I don't want you to pull up the chart and don't know where it's going. The goal is to get you your frame. You need to know your framework. So they should go that far. Now, let's see. One, two, three. That's only three. We got four. That's five. So they haven't made the trend back up yet. They haven't made trend back up. Matter of fact, let's do that. Let's make sure that we count the trend, the new one that'll start. I'm gonna just sit this off to the side because they might do it. Let's just sit that off to the side. But if not, let's say they're turning around. Let's say they turn around. We'll do something like this. I'll just leave it over here. They're going to have to go this far. So where is this far? That's there. Let's take a look at where that's headed. All right, so that's down into, yeah, that's they'll go under here. They're going under there if they fall. So yeah, let's take a look at what's going to happen now. Now remember on that daily, and we're going to take another look at that. We're going to see where that daily. Let me grab that. Matter of fact, let me grab it while we're doing this, so we can kind of see what that daily is doing while this is happening. It's all about two bars. Really simple stuff. That daily mid is not above that bar's high. It's not above it yet. This bar is a no close bar on your daily and this one. Now, do it have to stay down? Nah, it can go up. It can keep going up should it want to. All right. But this bar's mid fell beneath this bar's low. That's why this bar is the no close and the hard stop is both because it went outside the high and it came back and went beneath that low with that mid. Now, this mid isn't falling beneath this low by the time the clock run out, but we're not getting the close beneath the no close level, and there's your hard stop. So they have some decisions they're going to need to make. Now, the C is there also. All right, now I'm gonna move this out the way since you know what's happening with that daily. Don't need all of that. You can just trade this time frame, but I wanted to show you that too. We have two closes beneath that green bar's low. Right. So we have two closes beneath the green bar's low. One, two. All right. And that's when the C will pop up. All right. Now we're getting the overlap, which is this because that black floater is inside of this bar. All right. Now, if they trigger this stop, have to understand because they haven't made the trend back up yet, and so they may still want to do this trend distance. Don't want to see them do that. I mean, we kind of got your consecutive closes from down here, and it's a no close level. So we want to kind of see if the buyers can come back in this and take it back up there. Want to see if that's at all possible. Let's see. We got two lows. They're working on it. They got working on. We need one more. They're working on this again. All right. So they're working on this. You just need one more. That would help. And then hopefully they'll do this again. Hopefully. So let's see if they can get all three of them. I'm gonna put it there once the bar closes. I'll take and do this and draw it out for you. See if it'll show up. We're not getting the L or the H from above. We're not getting that because we only had this one, but we didn't get that third one lower. We didn't get that yet. It's not to say it can't work. It could work, but let's just see what they do with this bottom. All right, so it's approaching it. Let's approach having this scenario. We ain't gonna say it's gonna stick just yet because they haven't committed to the uptrend yet, but it's getting close. So let's go ahead and draw it in. All right, so we got that going on. All right, so we got that scenario again. All right, so we got that scenario again. Let me compress this, and we got the consecutive. All right, so we got both. So we got both. Now it can't be both. You do know that. You know that. I know that, and we both know that it can't be both. We can't go up and go down. We have to do one or the other. So let's see which one will it be. Let's see. But now this becomes the hard stop as well too. All right. This becomes the hard stop as well too. Now, if they're trying to reverse back down, you can use this mid. You can go like this. You can do that. You can say, hey, you hit the mid of this turn. Can't be both. Can't be both. Remember that. Can't be both. So we got to pick a side and say, hey, what's the chances? All right. They hit that mid, they came off of it, but they're giving you the C again. So they're able to get those two closes above this high. Okay. Above this high, they're able to give you the one, two. All right. So that means they can offer to you some more movement in this direction. And they closed above this mid. So technically they can take this turnout. They can. Really important that you understand it. And it's simple. It's not complicated. All right. So can't be on both sides. Can't be on both sides. So let's see what they do up here. We know we had a no close bar here. This is a no close bar. All right. So they ran above it. They didn't want to close. It kind of came back down. Totally get it. But they're putting the C, the C, the C. You got the no close with the hard stop. All of that is happening right in this area, right here. So let's see if they can get up and give us the other bars. Let's kind of go ahead and put some counting on this one because they may be able to do it. So we got 1, 2, 3, 4. That's 5, and we just need 2 more. I believe this one might make it. We're getting that mid above this high, so this is going to be a green bar with a hard stop, and you should see a C. Yep, you got a C because they did the consecutive closes there. So that's 1, 2, 3, 4, 5. There's 6. We just need one more. Just need one more. All right. C came in because we had 2 bars closing above here. Okay, so we had 2 bars closing above there, so you kind of get both one and the same. So you get the hard stop because of the no close. We just need to close. Yeah, we closed above here, but then we got another no close here. But I believe they can probably go ahead and get to it. So now let's take and start measuring, and let's look at the 2 bars more intently. It's really important that you spend some time looking at the 2 bars. Please look at 2 bars. So this should be this if they plan on doing it. Oh, I already had me a line over there. Never mind. We need the distance anyway, so that's fine. We'll need the distance. So it should go. So this would be the trend line. All right. So now we got our trend. All right. So now that's the trend. 2 bars, really important. Make sense of 2. These 2 right here. Take and slow it down. Slow it down. Please do not rush this. It's if you plan on doing this professionally for years, or just don't look at a whole bunch of bars for years and can't make sense of just 2 of them. Make sense of 2. What is these 2 telling us right now? What is it telling us? It's not ready to go. I do know that. It's not ready to go yet. Not yet. It's still stalling until this mid get above this high. Even if they break that high, it's still not ready to go. The ready to go will show up when you see this mid jump above that high. They're ready to go. You should be able to get them to go a bit further. You should. If not, it could run into this back and forth. Now let's see if it's going to give us some more overlap. Let's see if it's going to do that. You saw this mid above this high. It went some more. Now, how much more? See, and that's the thing. It just depends on, what time you're interacting with it because volatility becomes a part of it. Okay. See, they're giving you some more that's stalling, don't want to go, may even go the other way, and that's the other part of it too. If they go the other way, that's fine. We got a no close here. We got a hard stop here. That should turn them around and get them to go back up. All right. You want to interact when the participation is there. You want to see that participation there. Don't want these guys to start overlapping because then they can lean, kind of give you that drawdown effect because already has to rotate behind you to let you in the position. You just don't want it to keep driving against you once you take the position. You don't want it to keep driving against you. This will help you know that it shouldn't keep going. And you don't want it to drive against you. And let's say you take a position and that mid is under this bar and you take the position, that means it can go further. You'll want to take positions when it makes sense. That's all. Just want to take positions when it makes sense. That's all. Keep that in mind. All right. So the mid is inside this bar. That means it could still do that. Now, if this mid fall outside of this bar's low, they may offer some more to the downside. I don't suspect that they're going to want to wipe out this trend. So let's get our other marker here and give that distance. All right, let's kind of get that. We almost did it. Almost there. All right, so now we're going to go off of our trend bar. Okay, you see what I mean? That's what I mean right there. If that mid fall beneath that low, they can go some more. And then next thing you know, you're dealing with more drawdown. I don't want that for you. Don't want it for you at all. So just be careful with that. All right, so we had another no close level here. They tagged it. They didn't want to close. Several wicks is important. Several important. Yeah, had a couple of them. Yeah, let's see what they'll do. Let's see what they'll do. You had a hard stop here. Let's see if they'll turn this thing back around. It's not indicating that right now. It's not. That mid is below that low. Yeah, see, that's not good. That's the go. That's the go. And it can't be both. Remember, we just went over that. It can't be both. They're coming back into the center of this uptrend. So here's the center. Let's go center right here. That's the COT. That's the center of this uptrend. COT. All right. Really simple. Want to make sure that you can see the market very objectively. Want you to see it very objectively. Please hit the like button because I want to slow this stuff down so you don't get taken by the market. I don't want you to be taken advantage of. It's really simple. Make sure that you know that. So if they give the two, it's kind of all three signals that's get ready to pop up if they don't hurry up and get back up here. If they close beneath this low, the C is going to pop up too. Got 5 seconds. Okay, they didn't close beneath the low, but they have the H. All right, now what is the H? Let's go over that. The H is this. All right, remember we just went over this, but we're going to do it again. They're up here. Now this is a no close level. There's the hard stop. But here's the center of your trend, and they should offer you that distance. Now, that's not too much of a difference from the trend bar versus the center of the trend. So we'll just leave that there. We'll leave it there. Now, right around the center of your trend or near your trend bar, you should see some participation bars. Now, this is going to be a participation bar if they can keep that mid above this bar's high. That's the go. I didn't like what they did here. Didn't like that. Thought they would move it down just a bit more, and then that didn't look good at all. Now this mid is above the high, and let me show you your boxes. Let me show you your boxes too, because I know that's popular. It is popular, and so I want you to know what that looks like as well. Let's get it's somewhere around here. There we go. All right, so let's get some of that going. I want you to see your boxes too. So let's do that. All right, so a box should pop up here. It should, but remember your price pattern is already coming in before that shows up. Don't spend, a long time looking at the market and you're not making sense of two candles. Make sense of two, then make sense of three. All right. Two candles, then three. All right. Two candles, then three. It's always the same thing. I can assure you it's always the same thing. It is. It's trending or non-trending candles, and it's always doing the same thing, up or down. That's it. So don't spend a lot of time, looking at the chart for, of course, hours or years of your life. And it's only really just two candles that you need to pay attention to. Just two. Watch two and see what the two offer you. See what the two behaves like. And once you understand the two, then the rest will come together. Now you got all three signals on this turn. So they should definitely stay up. All right. So that's my time with you. And there's your box. All right. So there's your box. Here's your consecutive closes above this candle's high. There's two. So you got two coming in. Okay. And then, of course, that mid was above that bar's high. That's why you're getting that level and with the colored bar. All right. So now that's my time with you. I wish you all the best. Hopefully, by the time I upload this video, you can get the you can get that mid above this bar's high and then go ahead and take out that trend distance. See, can you get there? All right. So I wish you all the best. And again, if you want the chart scale, if you want the ranges, if you want the statics, just email me. I'll send it to you for absolutely nothing. You can have it for free. I want you to have whatever you need so you can become profitable. Get what you want out of this. All right. So that's my time with you. I wish you all the best with your trading. Take care.